What's up, guys? I am back on here for another video. So today I plan on going on here and explaining option for beginning traders, just more detailed. um I wound up uploading a video with no talking on this. I did that because I was not feeling good one day, so I was like, let me get this video out because this is very detailed information in this video. And I'm like, I need to talk over this because people are not going to understand this. As you know, a lot of people are new to trading, so they don't know what's in those slides. They're probably looking at them like, what the hell? But today I plan on going through here and actually breaking everything down, talking about it, and actually, like, just trying to explain it. I call it elementary style on everything that you need to know about options. So, what are options? As we know, I went over that. An option is a contract to buy or sell a stock. Each contract is worth 100 shares of the stock. So as you can see right here, I have it pinpointed where you can see 100 shares. The limit price, which is the bid, and then you got the ask. I'll go over all that. This is how it's going to simply look. So pretty much, as you can see, I was going to make a buy call, which I have a video about that, very detailed one, more visual learning on that. You can go look at that. I'll have the link to that in my description box. But I am buying a buy call for this one. I think that BABA will go up to $262.59. Don't mind the date. It says 129. This is an older picture because, like I said, I released this last week. So when you purchase an option, you can bet on if the stock price will either increase or decrease. Okay, and buying contracts allow you to buy or sell shares of a stock at an agreed price, also known as the strike price. And we'll go over that soon. So people don't even know, how do you get to a trade options? Because in some stocks, like the lower ones, you won't see the trade options button. So you will see it when you go to push trade. So you'll push trade because that's what you push when you tend to buy stocks. You'll push trade, but you will see above buy, like you see right here, you'll see trade options. So like I said, a lot of people don't see that. If you're working with penny stocks, you will not see that. So you got to pay attention to that because a lot of them do offer trade options, and that's how you will get to the contracts. So we're going to start with the buy call option. I have the video about that already, but we just go over it a little bit. So traders will buy calls when they believe the price of the stock will go up. In this picture, as you can see, the share price for Ford, that F stands for Ford, is $11.47. It was that. So say I thought, today, by the end of the week, or by January 29th or February 5th, or one of those days, which are the expiration dates, I think that Ford will go up to $11.50. Right here, guys, this is not $11.05. This is $11.50. Okay? So, say you planned on holding this contract until January 29th. We're going to say that date, or say February 5th. For each day, the reason I'm going to say January 29th, because that's the prices of the break even and how much it was in this picture. Every day, like each date, the break even price increases. So I can't say, hey, what that is right now. I'm gonna go off of what's on this picture. You will start making money before that stock reaches $11.50. Everybody needs to know that. You will start seeing money coming in. You do not need to worry about the break even price unless you plan on holding until the end of the contract. Unless you want to hold this past the end of the contract, then that's when you need to worry about the break even. So I did include the equation to the break even, or how you can get that and how I got that. So if you want to, that's important if you plan on holding. Buy put options, that's when the traders will buy calls when they believe the price of the stock will go down. It's the same thing as the buy call, but it's a buy put. So you think, hey, I think today Ford gonna go down to $11. Okay, or by February 12th it'll be down to $11. You can buy that buy put on there. That is you thinking, or you believing, or you having the proper research, knowing that this price will go below $11. You will start making money when the stock does drop. Like I said, it's the same thing. So once that stock does start dropping and start going down, you'll really see the money. You'll be in the money once it's under 11. but you'll be there like right before it start getting to $11. You'll be good. That would have been a good one to buy last week because they dropped. So a sell call option. These next two I'm describing I've never done, so I cannot be the good insider for this one. There's probably videos all over YouTube about this, but me personally, I can't tell you much about them because I don't know about them. I've never done it myself. So I'm going to just read what I put on the slide. So if you decide to sell a call option, you're giving the buyer the right to purchase that stock at a specific price. If the stock is going up or down, if the buyer does make the choice to buy, you will have to sell the agreed strike price. So it's pretty much fingers crossed that the option becomes worthless at the expiration date. Reasons to sell a call is less loss. Like I said, I've never done these. I plan on doing these in my near future, but I need the proper money to do that, so I won't be doing them no time soon. Sell put options. These are really expensive. Okay, like y'all do the math on these. These bad boys are expensive. So if you decide to sell a put option, you will collect the premium. You are purchasing 100 shares of a stock from the owner at the agreed strike price if the owner does decide to exercise the contract. Like I said, I don't know much about no sell options, no sell put options, so I cannot tell you much about this. But I do know they're very expensive. I don't know if I did a video on these, but I will do a video like breaking it down and explaining to you because this is more of a visual learning type of thing to know what I'm talking about. So depending on what you're purchasing, you could be paying a lot of money, like 20, 30,000. Yes. So the limit price, a lot of people don't know what that is. They don't want to look at that. So you could set a limit price. It should be set to the maximum price you are willing to pay. Okay, you see what I'm saying? You are willing to pay for a contract because you never want to overpay for anything. You will go in here overpaying, and then you'll look up your like the money you need to really get. You ain't really make it because you set that limit price way too high. You always want to set the limit price. Sometimes Robinhood will set the limit price for you, and they be messing up. Definitely if that stock is volatile at the moment. Me personally, I do not like buying into stocks when they doing that up and down stuff, when they too volatile, because it's very hard for Robinhood and most apps to get the prices right on stuff. It's a lot going on at that moment and stuff can get messed up real quick. Like I said, you want a bargain price. Sometimes trying to set this price at the opening hours of the stock or when the stock is having a quick spike or drop is not easy. The price changes quick and you will need to pay attention to what Robinhood is trying to set it to. On Robinhood, if you set the limit price too low, your order will not be executed. I'm pretty sure that's what majority of these sites. But if you set the limit price too high, you would like oh, your order is placed. We'll set it if it's not executed by 4 p.m. at the end of the day, then your order be canceled. If it sit there for a second, then you'll probably be like, oh damn, they ain't about to even execute my order. Damn, they straight got my stuff sitting there. And then you looking up the damn price of of the stock flying up to the sky, and it's like, oh my god. And then you look up, you missing out. So always make sure you paying attention and know what you're doing when you're going into this. How the contract page look. This is exactly how it's gonna look. It does not look like your regular stock page with, you know, the price of the stock up there. That's just like, so when you buy option, this is a buy call. The screen will look like this. As you can see, the stock price isn't shown at the top like usual, like I just said. Multiply that 86 cents that's right there by 100 and you will get your equity price. So a lot of people don't even know that. And right here, as you can see, I have the equity price. That's all I did with simple math. The break-even price, I'm going to say it again, is not important unless you plan on holding this to the end. And if you're making money, I will not hold it to the end. So the break-even price is the amount of money or change in value for which an asset must be sold to cover the cost of acquiring and owning it. I would not hold on if you're making a lot of money unless you know for sure this stock gonna go crazy all year. Get on out. That's how I feel about it. So I did like a little picture right here that was provided by a website. That's if you plan on holding. option stats. A lot of people don't even know what this stuff is. They don't even look down at it. Like I said, if you are a day trader, I'm pretty sure you're not looking at this. If you plan on getting out the stock quick, I'm pretty sure you don't plan on looking at this. So like I said, the bid price is the price that you can sell the option. The ask price is the price you can buy the option. Volume. The higher the volume is on that, like right here, this gonna be under your stats. Okay, look at that volume. This stuff is important. People do not pay attention to this stuff. The higher the volume, the better chance of the stock doing well. Please pay attention to this stuff. Okay. Then you got right here, the market views of the likelihood of changes in the given stock price you can use to predict future moves with the stock option. Please pay attention to this stuff. It's very important. People don't pay attention, and like I said, you are buying to something and it ain't doing good. And then you look up your money dropping. So I always try to, like I said, that also doesn't mean that the stock gonna do good. Definitely since they doing market manipulation right now, and that's on that. So as you can see, like this is the 5 main Greeks. As you can see in the previous slide, here are the Greeks right here. Delta, Theta, Rho, if I'm saying that correctly, Gamma, and Vega, if I'm saying these correctly. In this slide, you could look over this. I'll sit on here for a second. But each of these represents something. So the delta represents the sensitivity of an option price to changes in the value of the underlying security. Theta represents the rate of time decay of an option. The gamma, it represents the rate of change of delta relative to the change of the price of the underlying security. Vega represents an option sensitivity to the volatility of it. And then you got the Roy, which I'm pretty sure I'm saying it's all wrong, but it represents how sensitive the price of an option is relative to interest rates. Some words I may get messed up, y'all. My accent and how I talk, some of my words don't be coming out right, so please don't mind me. Okay, so when is the best to buy an option call? If you can get in when the stock price drop, that is best. You always want to pay cheaper is better. If you see a stock like Apple, for example, Apple didn't dip so much. They didn't sit out here and release this $111 billion revenue, all this good news about to go into EV, all that stuff, and the stock price didn't drop. Now, we know they just raised, like the analysts have raised the price and said that they believe that Apple will be at 160. I'm pretty sure it'll be above that. Right now, it's like at 130 something. That is the best time to buy in that stock. You know for sure the price of that stock will be going up. Analysts have told you. They believe that with all the beautiful news they have received, this is the best time to buy in. Buy an option for far out if you can afford it. Okay? Boom, that's some news right there. If you can buy an option call out for an extended number of months, that would be best, like I just said. So if you can get into Apple right now and buy out till next year, that'll be your best bet. If you expect the price of a stock to go up or down drastically, it's best to have a strong long hold. You always want to be in. You never want to be trying to buy in when the price is too high on stuff. If you expect the stock price to go up quickly, you can buy an option for a short period of time. Most options expire on a Friday. All the dates you're seeing on that top of the screen are for Fridays. That's when options expire. You could sell the same day if you could trade, or you can hold until you receive the amount of profit you believe is best for you. Like I said, if you know this is going to go crazy, stay in. But if you know, hey, this don't get too greedy. If you know this ain't going to go up like that crazy or nothing like that, try to get how much back. Like, try to get the amount you paid for that option back, and then you can get on out. Don't get too greedy in this game. Being greedy, you will lose everything. Always research what you are buying. Don't buy into nothing off the word of mouth. These people will tell you to buy into stocks that are not going to hit. They are literally long holds. Do not, if you're trying to make quick money, don't be listening to people. Always, always, always do your research. That comes from me too. That's why I provide y'all with articles anytime I name off a stock, because you going buy into something I tell you and then it go down, I'm looking stupid. So yeah, always do your research. The word of mouth can be deadly. That mug can make you lose some big money. Research is key. Please, if you plan on doing this for the long haul, please make sure you learn how to do research. That is just everything. You cannot order options after hours. Once the market though is closed at 3 p.m., you cannot put in. You could place your order, which would be the worst thing to do because you don't know if that price is going to drop or go high. You don't know. You can place your order, but it will be queued and it will be placed the next trading morning, okay? You will not see the number of gains increase or decrease on your options after hours. So you'll be like, okay, this price then went up after hours on this stock. The share price then went up, but my price not reflecting on my option I bought. It won't reflect into the morning, until the market open. I just want to let everybody know that. So just in case you start panicking, like, oh, they took my money. That's not the case. So always pay attention to that. Make sure you just pay attention to that, because I know people didn't freaked out about that before. When to buy out of an option contract. It's very hard to answer this question because I can't predict stock prices. I always try to check the volume of a stock. Also check the different option values. If you can't afford to buy a new stock scanner site that is best, some are free for a short period of time. My way of doing things, once I see the stock reach a certain peak, I buy out. Don't get greedy. Sometimes we can get greedy with stocks or gain attachment. A lot of people get attached to these stocks. This is a money game. Stop getting attached to stuff. Like, dude, if you making money off of something, get out, please. Stop. Oh, I'm going to hold on. It's going to keep going up. And you look at that mug and touch the bottom. Like, don't do that. All profits are good profits. Even if you can't have that mug making $10, you made $10 that you did not make $10 before. Like, that's $10 you didn't have. So always look at good profits. Like, everything is good. Anything that you did not have is great. Is the news and hype about this stock good enough to stay in? If bad news keep coming out, be cautious. Be cautious, because you will see people buying out of it. They get nervous. I don't know what's wrong, people. Definitely on stocks that got good news, y'all be buying out of the stock. It's even with good news or bad news. They be buying out, so you just never know. Call options do have expiration dates. If you hold until the expiration date and stock closes below the strike price, you will lose your money. Please, please, please make sure you're paying attention to what you're buying into. Don't overdo yourself. If you're not a day trader, you got to pay attention, because you look up, you buying or something, expiration date then came up, and then you sitting there on this, and then at 2 I think it's like 2 p.m. I don't know if they changed it, but it was at 2 p.m. one point when they started selling your contracts off. It may be the 3 now due to how crazy this is. But you look up, you done lost your money because it didn't reach the break-even price. So please make sure you very cautious and make sure you pay attention to what you're doing on this app. Thank you for watching my video. I hope I broke this down again for y'all. These are great notes, great pointers for people. I will be uploading way more videos. There's so much to this. I'm so happy to see people finally get into the stock market heavily like this, because there's so much money out here in this world to be made. Financial freedom is the goal that everybody should be aiming for. If you ain't, then you lost. Please like and please subscribe to my channel if you already have not. Thank you for watching. Bye.